Joining me on the show today is Kranthi Bathini. Kranthi, good morning. Thank you so much for being here with us. Well, it seemed that India had missed out on yesterday's rally because markets were shut on account of multiple festivals, including Ambedkar Jayanti. But it seems that that we haven't really missed the party. Nifty and Sensex up 2% in trade today.
Yeah, Karthik, you are absolutely correct. Up days, we are missing that momentum because of the holidays that we have in India. But by and large, we are following the suit. Okay, despite of missing the momentum on those uptick days. Uh, if at all those days are negative days, it was a good advantage for India. But uh, those days turned to be a positive days. Nevertheless, we are catching up the momentum at this point of time. One need to wait and watch. We are not out of the woods. Okay, it can be conceived as a strong relief rally, what we are witnessing in the market. But still, we are not out of the woods at this point of time. Still, the tariff worries are on. But there is a temporary gap for these execution of tariffs and all. But one need to closely watch the developments that's taking place. The narratives are changing very quickly in the markets at this point of time. So one need to be cautiously playing their games, moving their cards at this point of time, Karthik.
All right. So, I don't know, Kranthi, if investing in the short term is something that you would like to comment on or not, but do you think Indian investors should have a 90-day window right now to manage their investments? Because we know, at least with as much certainty as we can right now, that the broad tariffs are on hold for a period of 90 days. Should Indian investors be looking at a 90-day strategy right now, or do you suggest that investing should be done only in the long-term period, no short-term gains expected?
Karthik, in terms of the investing is concerned, one need to have a view for more than a year. That should be the investing strategy. Remaining less than 1 year, like as you mentioned, 90 days, taking the advantage about the current mood in the market and to make any kind of speculation in the medium to short term, one need to have a satellite portfolio in these kind of markets. You see, last 18 months, markets have been in a complete range bound. And probably in terms of the long-term portfolios are concerned, by and large, they have not delivered anything in terms of the long-term averages are concerned in the portfolio of the many investors. With respect to less than 1 year, where investors are the medium-term, short-term investing is concerned. Okay, what I can say, the delivery-based trading is concerned. One can take the advantages, but by and large, one need to have a strict stop losses at this point of time because, as I mentioned earlier, the narratives have been changing very quickly. What comes as a strong firm statement today, it may not be the strong statement at the end of the day. So the
Right.
narratives have been keep changing. So one need to have a strict stop losses to do any kind of a delivery based buying and selling is concerned, and also look at the VIX how violently it's moving. So one need to have these kind of observations on the radar to go for any kind of short term trading is concerned.
All right, Kranthi, so help our investors understand, especially those who are taking the mutual fund route and are really dependent on asset management companies and their fund managers and not really actively picking stocks or picking themes. Is this a time to primarily focus, let's say, only on the benchmark indices, do passive investment and not really go for active sector selection or active stock selection?
Yeah, it all depends upon the time horizon and also the risk appetite of the investors are concerned, Karthik. Nothing wrong going in mutual fund at this point of time. One need to have their mutual fund portfolio and one need to continue their approach in terms of their SIPs, regular SIPs are concerned. One can execute those things. There should not be any kind of a termination with respect to SIPs are concerned.
Okay.
One can continue their long-term passive investment strategies
Okay.
is concerned. With respect to the stock picking is concerned, one need to have a long-term approach and also look for the companies and the sectors, the specific stocks which have more about the domestic centric nature at this point of time. Okay, that those stocks are much more insulated when compared to the companies which have an export-oriented portfolio or stocks and sectors which are more vulnerable to the external shocks are concerned. So themes like, just to be specific, the power, infrastructure, and also the FMCG, railways, and by and large, some kind of a defense. These are the sectors much more insulated than the external specific stocks. Even the healthcare, domestic healthcare, is by and large a domestic oriented sector. But the valuations are not that much cheap at this point of time. They're at a premium valuations. Any dips comes, one can accumulate in the medium to short term.
All right. Kranthi, what's your view on gold? Because there are conflicting reports on gold as well. Whenever there is talk of recession, the R word, gold really rises. Anytime there's a pause on tariffs, markets start going up, gold prices soften. So for an investor in India right now who's looking at everything that is happening in the world, has no control whatsoever on what Donald Trump or his administration will do and which way the markets will swing, do you think this is actually the time to increase the holding of gold in your asset allocation?
In terms of the global macro perspective is concerned, gold has much more legs for the rally because of the global uncertainty, the fear and uncertainty that is taking place in the global arena is concerned.
Right.
And what we witnessed in the gold in the international markets, India had a double whammy where we had a depreciating currency, and global always gold is a dollar denominated asset. And
Right.
due to the uncertainty in the global markets, what we witnessed, the gold surprisingly rallying in the last fortnight from a $3,000 per ounce to last in 48 hours, it touched a high of 3,250 above.
Right.
So what we can sense at this point of time is whenever there is a fear in the market, whenever there is a uncertainty in the market, the international investors and institutions tend to go for the safe haven, that is only gold in the medium to short term. That's
Okay.
where the gold has been creating some kind of interest in the medium to short term. But in terms of the jewelry sales in India is concerned, all the companies are declaring the dip in the jewelry sales, okay, due to the high prices in the jewelry, gold prices are concerned. So one need to have a good amount of the asset allocation depends upon the investor risk appetite and also their time horizon. Definitely, gold is a warranted buy on any dips, Karthik, in the medium to long term.
All right. So buy on dip is the strategy for gold in the medium to long term. I want to ask you another question that has been sort of, bothering me over this long weekend. And Kranthi, help enlighten me and our viewers here. Whatever Donald Trump does, eventually the underlying belief should be that it is going to bode well for the US economy in the long term, and it's going to bode well for the US stock markets in the medium to long term as well. Is this a time that perhaps Indian investors should look at adding US stocks also in their portfolio?
Very interesting question, Karthik. Just look at uh, 3 months back, a quarter back, everyone was crazy about US market. US is going strength to strength. So let's sell emerging markets and let's go to US. And what we witnessed in India also, unprecedented sell of foreign portfolio investors going back to US. And after the Trump administration came into the power, there is a strong narrative. The MAGA is going on. So, but the change in narrative after these tariffs are concerned, let's sell US and go to emerging markets. And
Yeah.
in the emerging market space, there was a narrative. There were some weeks, sell India, buy China. And
Right.
right now, last couple of days,
Sell
sell
China,
China,
buy
buy
India.
India. So there is a quick change in the narratives are concerned, investing themes are concerned. So if you ask me, India looks as a bright spot at this point of time. We are on a sweet spot. But the investors who want to diversify their some portion of their portfolio towards the international equities in US is concerned, depends upon the size of their portfolio. By and large, I'm not a great favorite at this point of time to chip in into the US mega magnificent seven also. They
Okay.
corrected a lot. The valuations are quite expensive. Until
Right.
unless the investor is a strong stock picker,
Yeah.
I don't think so. there is greater value that's left in US markets at this point of time. It all depends upon the individual stock picking skills. At the same point of time, what MAGA, let's make US great
Great
again,
again.
it takes time. It's
Right.
not a overnight thing that's going to happen.
Right. I know. I was reading somewhere, Kranthi, that for Apple to move just 10% of its production to the US could take as long as 8 years. And this is a 2022
Absolutely. It's
Bloomberg
not
report
going
that I
to
was reading. So
happen
it's nothing that's
overnight.
going to happen overnight. But let's leave it at that for now. Kranthi Bathini, always a pleasure having you right here with us on
Thank you,
Morning Brief
Karthik.
at
Always.
9. Thank you for joining us.